In this video, we're going to talk about the CCX. The CCX indicator in Jurek is not the same as this CCX. The functions are the same, but we've added an additional feature to it that allows us to, we call it the RSX function, or the RSK function. And this has the impact of smoothing or creating greater volatility out of the indicator, just like the Dynacontrol does in the RSX. But we find that the optimal setting is 6. You will not see a tremendous variation if you manipulate this number. And there is an array workspace that will demonstrate that for you. You can increase these numbers. You can mess with them. Look at the array to see its impact. But the reason we have this indicator in here primarily is for the 0 line. When this indicator is above the 0 line and stays there, you're in an uptrend. And anytime it drops, all right, is a perfect opportunity for it to go long. So you can use these very nicely to look for opportunities to enter the trend. Okay? Now, it also does a very good job of displaying divergence. But just like the TSC, sometimes it's not going to be divergent, and you're not going to see the opportunity to use this indicator to enter a short trade based upon its based on the fact that it won't be divergent. Okay, so for example, right in here at that high, well, that was the high of the day, and it was right up there. There was no divergence here. So it's not always going to give you what you want in terms of divergence. But the 0 line is important. Again, the slope is designed in the same way as others. And by the way, we've got it on a histogram setting so that the 0 line is clearly evident. But below the 0 line, an uptrend, an upslope is green. Above the 0 line, it's cyan. Above the 0 line, a down slope is magenta. Below the 0 line, it's red. Okay, that's the significance of all of that. So now when we use this in conjunction with the other indicators, we get real accurate. Okay. Now let's just talk about its performance as we go up into this move. Here's a higher high. It's clearly divergent here, so you can see divergence very easily on this, but not always. Here is a good low entry, but it's a lower low on the CCX. So again, you won't always see divergence. So keep in mind, the primary reason we have this is for the 0 line. And we have this on each one of our charts, which enables us to also use this for the sake of divergence. And it works very well on the premium as well. Right? Okay. Nice divergence showing up in here, however. And as we get higher and higher, here we're at a high, we are divergent compared to these highs. We're higher compared to these readings on the CCX indicator. And it's higher than it was here. Higher high here, higher high on the CCX compared to over here. So that could fool you as to whether or not this is a good time to enter a short trade. So that's why we have other indicators on here as well. So we use them in conjunction. We look really at all of these, the CCX, the RSX, the TSC. So let's go back and we'll turn these on now. That's the CCX. We'll use this RSX and that TSC. Okay. So at this high, why do you want to go short? Because the TSC is divergent. RSX is maxed out. This is difficult to say whether it's divergent depending on what you're comparing it to. But the TSC is divergent. TSC is divergent over here too. And you're essentially at a lower high on the RSX compared to these highs. And again, compared to these highs, this is a lower high, but not compared to the last one, because it really wasn't a higher high in the first place. But the TSC is divergent, and you do have divergence